Musk juggled drugs and family drama on the campaign trail.
A group of Optimus robots was spotted dancing inside an enclosed gazebo.
250 miles in 5 minutes.
That's faster than Tesla's.
It's one thing to miss Wall Street expectations. It's another thing to do it while the world watches you build robot babysitters, endorse far-right politics, and roll out robo-taxis with human chaperones. But that's exactly where Tesla is right now in 2025. And it's, well, funny but also chaotic. Tesla's rocky road in 2025. Tesla just reported its second straight quarter of declining automotive revenue. That alone is a red flag. For a company that once symbolized the future of mobility, 2 consecutive quarters in the red on its core business is not something investors take lightly. The second quarter numbers just dropped, and they don't paint a pretty picture. Tesla brought in $22.50 billion in revenue, slightly short of the $22.74 billion analysts expected, according to LSEG. Earnings per share came in at 40 cents, also below the projected 43 cents. That might sound like a small miss, but in the high-stakes world of tech giants, missing even by a few cents can send shockwaves through the market. And it did. Tesla's shares sank more than 4% in after-hours trading as soon as CEO Elon Musk and CFO Vaibhav Taneja started talking. And what they said, that made things even funnier. Musk's tariff talk and tax credit trouble. Musk, never one to hold back, hinted that things might get worse before they get better. "We probably could have a few rough quarters," he said. Not exactly the confidence boost shareholders wanted. The pain isn't just from internal challenges, there's been external pressure too. Tesla is reeling from the effects of new tariffs and the looming end of a crucial federal EV tax credit. That $7,500 federal tax credit for EV buyers. It's going away at the end of September, thanks to a new bill passed by Congress, what Taneja called the Big Beautiful Bill. This could severely limit Tesla's ability to close deals in Q3. Taneja admitted, "We may not be able to guarantee delivery orders placed in the later part of August and beyond." Not exactly a selling point for anyone looking to buy a Tesla this quarter. The tariff issues, which stem from Trump's latest round of trade regulations, have forced Tesla to scramble and reconfigure supply chains. Musk's alignment with Trump and his Department of Government Efficiency, yes, that's a real thing, has become a political and financial hot potato. Why Tesla's market share is shrinking. Let's get to the heart of the matter. People just aren't buying Teslas like they used to. In the second quarter of 2025, automotive revenue came in at $16.7 billion. That's a steep drop from the $19.9 billion Tesla pulled in during the same period last year. That's a $3.2 billion hit. Dig a little deeper, and the decline in regulatory credit sales is just as glaring. Revenue from those credits fell to $439 million, down from $890 million last year. And what about deliveries? They were down 14% year over year. Tesla handed over just 384,000 vehicles in Q2. That's a troubling trend for a company that built its brand on aggressive growth and sky-high expectations. The root problem? Tesla is losing ground to competitors who are doing 2 things better: affordability and innovation. Chinese EV makers are flooding the market with affordable models that come with standard self-driving tech. Meanwhile, Tesla has been dragging its feet on launching its long-promised budget model, commonly referred to as the Model 2. The long-awaited, affordable Tesla. Is it too late? In its latest shareholder update, Tesla finally revealed that the first builds of a more affordable model began in June. Volume production is planned for the second half of 2025. The timing? Awkward. Because while Tesla delayed this model for years, rivals were already rolling out cheaper, high-tech EVs. This could have been Tesla's chance to regain market dominance. But with delays, tariffs, and tax credit issues all hitting at once, the release could end up being too little, too late. And even if it hits the streets later this year, Tesla's delivery bottlenecks in the US could choke its momentum. With limited supply and the federal tax credit expiring, customers might just skip the Tesla queue altogether. Robo-taxis and robots. Musk's big distraction? Elon Musk doesn't want to talk about revenue declines. He wants to talk about robo-taxis and humanoid robots named Optimus. And while those sound futuristic, they aren't saving Tesla's stock price in 2025. According to Musk, the company began testing its robo-taxi service in Austin, Texas. It's a closed beta with a human valet on board, so not exactly the driverless utopia people expected, but Musk insists the service will expand into more cities soon. Eventually, without a safety rider, Tesla promised in the latest shareholder update. Musk went even further during the earnings call, stating that Tesla wants to make autonomous ride-hailing available to about half of the US population by the end of this year, pending regulatory approval. But this isn't the first time Musk has made bold claims about self-driving. He's been predicting robo-driving dominance for over a decade, and so far, the timelines haven't held up. Alphabet's Waymo, on the other hand, is already operating fully public robo-taxi services in several US cities, including Austin. Tesla is still playing catch-up. Meanwhile, Musk's dream of humanoid robots that can work in factories or even babysit your kids is still in early development. It's the kind of futuristic vision that grabs headlines but doesn't help revenue today. Political backlash and brand damage. There's no ignoring the growing backlash against Tesla in both the US and Europe. Musk's highly publicized support for Donald Trump's re-election campaign, and even more controversially, his endorsement of Germany's anti-immigrant AfD party has alienated a huge swath of consumers. His leadership role in the Trump administration's Department of Government Efficiency, where he led efforts to eliminate the United States Agency for International Development and slash federal jobs, hasn't helped public perception either. While Musk's base of supporters remains loyal, the broader EV market is becoming more politicized. For a brand that used to be synonymous with clean energy and progressivism, this shift is proving costly. Falling behind the pack, Tesla's competitors are not waiting around. Automakers across Europe and Asia are pumping out new models at aggressive price points. Chinese companies in particular are leading the charge with affordable EVs that come with self-driving and luxury features built in. Tesla's once dominant supercharging network is growing, up 18% year over year, with more than 2,900 net new supercharger stalls added. They now have 7,377 supercharger stations globally. That's impressive, but infrastructure alone won't keep customers coming back if the product and pricing aren't competitive. Even in Tesla's non-auto business, like charging and services, there's some good news. Gross profit in that segment rose 17% year over year, thanks to improved profitability from supercharging. But it's not enough to offset the broader slowdown. The numbers don't lie. Tesla's net income fell to $1.17 billion this quarter, down from $1.4 billion a year earlier. Earnings per share slipped to 33 cents from 40 cents. The declines are steady, not catastrophic, but the trend is clear. And it's not just the current numbers that matter. Tesla's stock is down 18% in 2025, making it the worst performer among major tech megacaps. Compare that to the Nasdaq, which is up 9% this year. Investors are clearly losing patience. Tesla's digital assets, though, have seen some growth. According to the shareholder update, the company now holds $1.24 billion in digital assets, up from $722 million a year ago. But again, that's not enough to shift the narrative or fix the balance sheet. Investors are losing confidence. Tesla's brand used to be untouchable. People lined up for years to get their cars, and investors threw money at the company like it was the next Apple. But that shine is starting to wear off. When you have 2 straight quarters of falling deliveries, falling profits, and weaker cash flow, even loyal shareholders start to question if the company still deserves its trillion-dollar market cap. Institutional investors are starting to reduce exposure. A few large funds trimmed their Tesla holdings over the past few months, citing concerns about long-term demand and leadership distractions. Meanwhile, retail investors who once believed Tesla could do no wrong are also growing skeptical. The excitement around Musk's tweets and futuristic promises doesn't hit the same when the numbers don't back it up. Stronger competition than ever. At the same time, Tesla's not dominating the EV market like it used to. In China, BYD has already passed Tesla in total EV sales. In the US, legacy automakers are finally catching up. Ford, Hyundai, and GM have started producing EVs that people want to drive, and they're doing it at competitive prices. More importantly, these companies already have huge service networks and experience scaling production. That matters to customers who care more about long-term support than who made the flashiest battery tech. Tesla still has a lead in things like software and battery integration, but that lead is shrinking fast. And without the EV tax credit in a few months, price-conscious buyers may look elsewhere. Tesla's once loyal customers now have real alternatives, and they're taking them seriously. Tesla's current situation is both funny and frustrating. It's funny in the sense that this is a company trying to sell robot babysitters while struggling to sell cars. It's frustrating because there's still incredible potential here, but it's being overshadowed by politics, delays, and questionable priorities. Musk wants investors to stay focused on the future, robo-taxis, Optimus, a world where your car makes you money while you sleep. But in the present, Tesla needs to sell vehicles, and right now, it's not doing a great job of that. What's next for Tesla? That's the big question. Can the affordable model coming later this year change the game? Will the robo-taxi service ever get regulatory approval beyond test areas? And will the political damage Musk has inflicted on his own brand be reversible? Let us know your thoughts in the comments. Can Tesla bounce back, or is the EV pioneer now playing catch-up in a race it once dominated? Stay tuned, because what happens next might just redefine the future of the auto industry and Elon Musk's legacy.